Welcome to Revere Asset Management's Your Money with Danny Stewart
The market will always overshoot to the downside and to the upside.
and Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
Have you heard? Have you heard? The Fed dropped rates by 50 basis points a few days ago, just in case you haven't heard. A few Democrats were begging the Fed to drop it by 75 basis points, but the Fed thought a half was just about right, just that middle of the road, like the porridge, like Goldilocks porridge. It was just right. Now, but I thought the economy was strong and jobs were robust, even with recent statements by the Fed. No? Well, maybe, just maybe, we should stop listening to the Fed and especially letting the Fed forecast with our American dollars. But hey, that's me. I'm a Keynesian. I'm not a Keynesian and I'm not a homer for the Fed, but it doesn't matter what I think or what anybody thinks. It's the reaction to the drop in rates that matters. There's a big fundamental shift that is occurring, and the markets have spoken. Have you made any changes? Are you ready? Are you ready? I think that was a Warriors line in the movie. Oh, no. It was, can you dig it? Can you dig it? Can you make the changes? Now, last week I talked about having a dream, having an investment dream, that someday investments will be judged by the content of their character, their cash flows, relative strengths, and not by their brokers and ropers and cowboys delivering you the cattle to market. Because they think it's your money, their money, not your money. And that's why we named this show Your Money, because it's your damn money, and they better give you a damn good reason why you should give it to them. Otherwise, keep it in your pocket. Anywho, we're gonna stay on that message, and we're gonna dive deep into the markets very quickly. But first, do you love your jogs enough to give them some of your medical benefits? Well, a new bill has come out in Congress. They're floating a new bill that, hey, $1,000 a year from your HSA account could go to pay for your dog or cat. Who knows? Maybe it'll help some of the people in Springfield. Too soon? Sorry. Anyway.
No, not too soon.
Anyway, that's an article. That's actually true. They're doing that, and that's fine. I'd use it on my pets. Anyway, they've also got an article about the salt cap possibly being increased. But here are the two big articles you may want to pay attention to, and it's really how to pitch advisors like me on selling you ETF. So one is about the Apollo private credit ETF that's coming down the pike. And then another one is about how endowments plan to ride this private asset craze. Folks, every craze I've ever monitored never ended well. So I'm just saying, remember, the S&P is in first place, has been in first place. Will it remain? Who knows? But right now, everybody's flocking because you got performance chasers. Everybody's going and hurting toward the S&P. And by the way, that's probably the right move, because why take risk overseas if you can make more money in U.S. stocks without any other outside risk or currency risk? But here's the problem. When everybody's going into these highly liquid S&P stocks, all their private deals, their private equity, their private credit, their private paper is not getting funded. There's a liquidity issue, and they need more money. They need your money to make it their money. So they come up with these integral funds where it's like the Hotel California you can check out, but you can never leave, or you leave in dribs and drabs and increments. In fact, we've got a client that transferred in with an integral fund. You get 1 day a quarter. Interval. Anyway, you can sell it 1 day a quarter if they allow you to sell it. The last time they said no. So we got this one fund. We tried to sell it 3 different times, and we've only trimmed down by about 50%, I think. I mean, it's taken us a year or two to get out of this damn thing. Just think if they really start having problems and real estate or private equity or private paper really has problems, then you can't get out. Anyway, whenever there's a whole bunch of articles and the big craze, remember all the articles about the new Bitcoin ETFs. Bitcoin ran up before that. And ever since all those Bitcoin ETFs have come out, Bitcoin's been a little under pressure. I'm not saying Bitcoin's not bad long term. That's not what I'm saying. What I'm saying is they're trying to get the money. They're trying to create these products either where the action is happening so they can make money off you or where they need money to put money in. And right now, they're trying to suck you into these private credit market, these private real estate deals to kind of make you feel like you're sort of accredited if you're not, make you feel like you're joining the big boys club. Folks, in reality, the big boys are now monetizing this through the ETFs, and they're going to cash out to you. The big boys are selling to you. So just food for thought. Anyway, if you have someone from the sell side, a broker, tell you that you need an interval fund, run. Anyway, that's my two thoughts. All right, let's go to the mailbag very quickly. And by the way, folks, if you've ever got anything you want, topic, stock, just reach out. All right, 918 from CC. Dan, greetings from Montana Bush. Bush country. Do you know the name of the company or stock symbol for the company making deployable MIC reactors, meaning those portable nuclear reactors? Thanks, CC. Me, SMR, New Scale Power. Oh, that's all. All right, 919. ND. And she sent this through me through Twitter. She is a client. I'm glad to see MicroStrategy in the portfolio. I know we got stopped out of the ETF a couple times, but Dan, we know the money printing game can only end one way. It gives me peace of mind we have some hedge. She also put in a article about the Bitcoin as a unique diversifier. Now that PDF is in the show notes in the article, so you can go read that too. With the disclaimer, it is from BlackRock, the ultimate sell side. So take it with a grain of salt. Anyway, me gave her a thumbs up. She also included the Bitcoin I put in the show notes. Take it with a grain of salt from BlackRock. Oh, I just said that. All right. Now, so, folks, if you'd like to have any topic, let's try that again. If you would like any topic discussed, or if you want a stock analyzed so we can judge the content of that stock's character, send it to us. You can just go to Revere Asset's website, Revere Asset, up in the top right-hand corner. There's a Contact Us page. It'll send me an email directly, and you can ask the question, ask for a complimentary portfolio review. You can also email me directly, dan@revereasset.com. Anyway, with that said, I want to go straight to the markets. We're not going to dive down to any political topics or any broker topics or insurance agents. I beat them up enough. Okay. I want to go to Team Revere, and I want to find out which stocks are exhibiting the most positive character, providing the best retirement dream outcomes, the best probabilities and by the way, we want to know what the character of the overall market is. So with that, Don, it's you. I set you up, Don. Let's take it away. Hit it out of the park like what's his name last night with 3 homers in one game.
Let's go, Dan. And can you believe he's a pitcher too?
Oh,
I'm talking about
man. Eddie's fast, steals.
Yeah, I don't think he's pitching this year, but first guy with 50 steals and 50 homers in a season. Anyway, what I'm showing, Dan, is the way we really boil the market down to deciding how much client capital we're putting at risk is we look at 3 time frames and how market leaders are doing. And we're flashing all green right now. Every night in the video, we discuss these. I call it the coveted 4 green arrows. This is what you want to see. It means that all the moving averages and the major indexes are trending above their time frames and market leaders are acting well. And this is just a tool I developed over the years to keep me in the market when maybe I was questioning myself, as well as when you get a sell discipline. I found when you get a set of rules that takes you out of the market, you have to be careful not to overuse it. The market over the long term trends higher. So over the years, we've developed a bunch of rules at Revere to keep us in the market and to determine how hard we should be pushing down on the gas pedal or whether we should be tapping the brakes for what's going on. And that's why our flagship portfolio is called Growtection, dual purpose, grow assets and uptrends. When things start to go sideways, pull back a little bit. If you get into a downtrend, you get the heck out of the way. And very simple. Over the last 2 weeks, we've gone from starting to get out of the way with a break of short-term and intermediate-term moving averages to a big outside positive reversal on 9/11. And we were focusing on this band of resistance. In other words, the highs that we made back in early July, the highs that we made in mid-August, and could we get above this level? And we tried on Wednesday and failed. We tried on Thursday and failed. And we tried on Tuesday and failed. We tried on Wednesday and failed. Thursday, the day after the Fed, initially we had a negative on the Fed, but you got to give the institutions time overnight to determine exactly what they think is the impact of Fed policy on their investment decisions. We're following the footsteps of the elephants. The big institutions are the ones that decide whether the market is going to go up or go down. They have sophisticated financial models. They look at the earnings of the S&P 500. They put a multiple on there depending on the multiple varies as to whether or not they are optimistic or pessimistic. And on that, you derive the value of the S&P 500. And finally, the day after the Fed, on strong volume and on strong price action, we broke above that level. That level was a band of 56.52 to 56.70. We broke above it. We back tested it today, meaning we pulled back to test that level. So now we're looking at a situation where this big band that had been resistance back in July, resistance in early August, resistance in early September has now been broken, and it should flip to support on any pullbacks in the market. And so far today, we pulled back to 56.74, which is 4 points above the top of this band, and we bounced at that level. And as long as we're above this level, the major averages are going to stay with the green arrows, and leaders are very plentiful. They're going to stay with the green arrow as well, and that's going to tell us to, in a prudent manner, put the gas pedal down, find low-risk entries in leading stocks in the leading sectors. And until that changes, we're in the grow portion of Growtection.
The grow
detection
mode.
part, yep, the detection part stopped on 9/11 with this big outside reversal to the upside. Coming back up through the moving averages, we got little by little more involved in the market. And when the break above yesterday, we were already there. The good thing about it is we didn't really have to chase. Our rules got us back in when we got above the 50-day, back above the 20-day, back above the 8-day. We're not going to argue with what the market is doing. We want to be in sync with the market. So we're already positioned long with our beta above 1, which is where we want to be when we're above the 21-day moving average. Our floor for exposure is a 1.0 beta. We were at about 1.15 is where we were. We took advantage of the gap up in the stocks and the indexes, added a little bit more exposure yesterday. Testing this pullback today, we added a little bit more exposure, and that's where we are until things change. Not our opinion, just the facts on what's going on with the market.
And when I want to clarify something, and when he says get back in, folks, he didn't mean we went completely flat and went 100% in cash. We trimmed some down as the market started pulling back and breaking the 21 and even approaching the 50, right? But as long as we're above the 200-day, we have some minimum amount in S&P, and as long as we're above the 50-day, we also have another layer. So we got 3 different layers of the S&P, and so when Don says get back in, he's talking about we only pulled that first layer or layer and a half off. We never went completely to cash. And
right under the 50-day, under the 50-day, between the 100-day, our floor for exposure is a 0.5. So we want to be half the beta of the S&P 500. And if we break the 100, that's another level. If we break the 150-day, that's another level. If we break the 200-day moving average, as I say all the time, this is where risk is at its maximum. Every bear market in history has taken place below that black line, the 200-day moving average.
And by the way, that's just the way the math works, folks. I mean, if you're selling off and you're going down, you're going to pull the averages down. So you've got to break a certain magnitude. Bear markets have a big enough magnitude that they're going to pierce the 200-day. That's how you know if it's heading toward the 200-day, your antenna better be up that, hey, this very easily could be a bear market. And it's the rate of change of the slope of the line. It's the ROC. It's a second derivative. How quickly is that line either turning downward with a very negative slope or flattening? See, if it's flattening going horizontal, that means selling's abiding. And if it's turning up, that means buying starting to increase. So we have measurable metrics. All right, before you go to the team, Don, I've just got one question. We follow the footsteps of the elephants. Is that your quote or is that somebody else's?
No, that's just one of the tenets of IBD and O'Neill.
Okay, I figured that
they talk about the footprints of elephants in the sand. If an elephant jumps in the bathtub, all the water's going to come out. That's
I caught the analogy. I was hoping I could give you credit for it, but apparently not. So anyway,
no.
All right, go ahead. All right, I want to see what the guys have brought forth. They're going to actually present some stocks that actually have great content of character. So guys,
let's talk about. Before I turn it over to one of them, and Zach always creates an awesome tile for our podcast, and I told him the two that we added to the portfolio this week, so he could work them in: Uber and Tesla. Two new positions in the portfolio, and we also added a Lilly this week on a reclaim of the 21-day moving average. So. Those are some stocks that we added to the portfolio. Let's go to Connor. He's got 3 leaders, and Ted's got 3 leaders. We'll start off with Connor.
Yep. Yeah, so 3 stocks today, and like Don mentioned, we're in grow mode as evident on the trend gauge. So 3 different names that I'm watching. Not all these are in viable positions, but first stock is Coherent, and this one is a little bit extended. But so for each stock, I kind of got like 3 fundamental one-liners and what I'm seeing on the chart. So first with Coherent, the one thing that's standing out to me is the AI demand. The CEO in their earnings call the other couple weeks ago noted a 50% sequential rise in EPS, which is mainly driven by the AI demand. So, AI is the buzzword. Everybody knows it, but when the CEO comes out and tells you 50% rise due to the demand from AI, that's what you want to see. And then another thing is their new leadership. They appointed a new CEO. His name's Jim Anderson. He was previous CEO at a few other semiconductor companies, and he has a strong track record. And then the expanding opportunities. Obviously, data centers are a big part of their revenue and their growth, but they also engage in telecom systems, semiconductor equipment, robotics, and EV. So this company kind of hits it all. And when we look at the chart, first of all, it's breaking out of a daily cup and handle, and Don's noting the volume. That's always what you want to see when a stock breaks out. If there's no volume, more likely than not, it comes back into the base. But you're seeing people get into this name. Relative strength line is at all-time highs. And if you look at the weekly, it's really it has had a strong multi-month move. But when you zoom out on the chart, you can see that 80 level has been resistance, and it's finally kind of clearing a lot of that supply. So there should be less sellers as this moves up. And then a couple other things, Druckenmiller. If you're not familiar with him, he's one of the best fund managers. This is a position that he owns, so that fits in with we want to find stocks with institutional sponsorship because they tend to get supported on dips. And, this has got an up-down volume ratio of 2.1. That's pretty rare. You don't see many that high. So this one looks good. And then short term is extended a little bit. Some ideal ways to get in. You could wait for a pullback to that prior top of that base. You could wait for it to maybe it catches up to the 8 or 21. And then another thing that Don taught us, and he's mentioned in some videos, is if you go on a 60-minute and put that stochastic on, when you get those oversold readings, that can be a good entry, because as we know, for leading stocks, they're not always going to give you that picture perfect daily setup. And, they don't want to let you get in. So narrowing down your time frame, pulling up a 60-minute chart, and kind of finding a low risk spot when it's pretty oversold can work great in uptrends. So that is Coherent. Second stock is GEV. This is GE Vernova. And some things I like about this stock is their revenue growth outlook. Analysts forecast revenue to grow to $5.43 billion in 2025. That's a 15% year-over-year improvement. And I've been talking about AI, and all these data centers need energy. And GEV is the leader in the electric utility sector, and 85% of its sales are tied to this market. And then when you look at the overall utility spending in US and Europe, it's expected to grow at a high single-digit % annually, which is outpacing the broad industry trend. And then again, that AI demand, this one can be a big winner. Technical wise, again, this one is extended, but something to note is that when the markets were declining, the leaders were standing out. So that's normal to see the true leaders get extended now. And now you're going to be wanting to look for that first pullback. And this one just fits the criteria: volume on the breakout, relative strength, new highs in a good theme sector. And so, some ways to play this. If this can pull back to the 21, the 8, that's an opportunity, along with that 60-minute stochastic cross can be a good reference guide as well. And you can see this is even well above that standard 20% pivot. So that's GE Vernova. And then one last one is FTNT. This is Fortinet. Now this one is in a viable position in my opinion. And a couple things I like about this stock is, one, it's just from pure price perspective. If you look at the other stocks in the sector, CrowdStrike obviously had that huge gap down on that data breach. And this one has been showing major relative strength. If you're on a comparison chart, this one's outperforming all those by a wide margin. But a couple things for this stock specifically is they're pretty well versed in the secure access service edge segment, and that's just a growing cybersecurity market. And that market is projected to reach $16 billion in 2028, and Fortinet is the leader in that segment. And technical wise, you can see it had that earnings gap on volume, then trickled higher, never really offering an opportunity. But now finally that 21-day has caught up to price, and it's forming a clean flag downtrend line with that 21-day slightly below on lower volume. So this looks buyable and a very low risk entry using that 21-day as your stop. And so those are three stocks that actively watching.
Great point, Connor. Notice the 2 pullback days this week, how low the volume was. Compare that to the up days where the volume was, the 3 days on either side of those 2 days. And then today we've got above average volume as well. So nice rest for this stock after a big earnings gap up right at the top of the base. Let's look at a weekly really quickly. Look how tight that action is after the big move up. So definitely one to keep an eye on. Thanks so much. Let's go over to Ted. He's got 3 more, 2 big caps that we own in-house, and a news-driven stock today.
Let's do it. So Dan, you said you had a dream. We're here to answer your dream.
Okay.
We're going to talk about we'll talk about the character or the content of the character of these stocks. So the first one isn't your necessarily typical CANSEM leader, but it is a mega cap and it's starting to show relative strength and it's starting to turn on a larger term time frame. Don, could you please go on the monthly chart? And so we've discussed the volatility contraction pattern a bunch of times on this show in previous times. Tesla staged over 1,000% plus move in that 2020, 2021 bull market. And more or less for the last 3-4 years, it's been going sideways. And you can see in that first correction, about 70%, that was the largest, what we term contraction. And then you had this more recent one, Don, if you can also draw that line across, that came down to Don's upper trend line. And finally, we're starting to have these very tight months here. So now if you can go on a weekly chart, Don, I just want to highlight some key levels I was watching and we talked about on our daily videos, and then the current levels that we are watching. So the first one was the 235 level. Actually, a daily chart is probably better for this. So we can highlight the unfilled gap that was acting as strong resistance. And if you've been following our videos, we've talked about it. And oftentimes unfilled gaps will act as resistance, but the moment there's a decisive break into that gap, it can fill quite quickly. And that's pretty much what we got yesterday. It didn't completely fill, but it pushed through 235 and quickly pushed up to that 245, 246 area. Today we have an inside day, so completely normal action. The volume is contracting as well. So those are some current price action that I'm looking at. The next really key level is that high right there, 265. And once we take that out on a weekly chart, even monthly chart, you can call it a change in character because you break the longer term downtrend line, you rally up, hit resistance, pull back, and then you clear that resistance. And that's a true set of higher lows and higher highs. And then if you zoom out, Don, to the weekly chart, the next really big level is 300. And if the weekly chart doesn't get it, actually it does. You can draw a line all the way back to those 2021 highs. And that, as you can see, is a very key level. And if we really clear that, game is on for Tesla once again. And we've mentioned Tesla in the past as a leader that's topped, that's fit the bill of the 72% on average correction of a market leader. But now we'll see if it becomes a turnaround situation. And that's kind of what we're looking for. And some fundamental catalysts would be the beginning of their full self-driving internationally, their robo-taxi event coming up early October. We'll see how institutions react to that. And then, of course, their humanoid robot development. And then in terms of macroeconomics, as you know, the Fed lowered rates by 50 basis points, and that often can kind of give a little bit of boost to auto sales, just with lower financing terms, lower car payments, and people will also have more disposable income to buy cars as well. So that is Tesla, some key levels we are watching. And then the next one we own as well, probably the most consequential name in this entire stock market right now is NVDA. We've talked about the general, like the average length a true market leader runs, which is about 18 months. And this has hit that, but the absolute best names can go further. I just want to preface this with this base is what we would term as later in the move. It is definitely a bit wide and loose relative to the bases before, but that doesn't mean it can't set up once again and make all-time highs. And we don't predict, so we'll just judge price action, the contents of the stock or the content of the character of the stock as the days and weeks go by. And right now, we see some volatility contraction in this base as well. And this recent pivot, this recent range is extremely, extremely tight. And the key level that we're watching for, potentially for add-on actually, is this 120 level. And above that, you have 130. And then after that, you have 140. So you can treat those levels as areas to pyramid into the stock and really get yourself a nice position before all-time highs again. And of course, you don't really need to get into the details of NVIDIA fundamentals because it's the talk of the town. Everyone knows that it literally runs a monopoly in the GPU markets, which are the chips that are used to train all the various large language models in the world. They have a monopoly on the H100s, and then they're starting to bring out their B200s as well. And pretty much every company investing in AI, all the major CEOs, including Elon Musk, Oracle CEO Larry Ellison, there's a story that those two guys, as well as Jensen Huang, NVIDIA, had a meeting in LA or San Francisco, and they said, we can't get enough of your GPUs. Please produce as much as possible. So they have high margins on these as well. I think they cost 30 to 40,000 a pop, and it doesn't cost them too much money to produce one either. So until a new competitor enters the space and starts taking market share, NVIDIA is just complete cash flow machine, and they're still growing even at a 3 trillion market cap, still growing triple digits quarter after quarter. So it's quite remarkable. And if they can sustain this growth and even surprise them in a few quarters with their B200s, we'll be involved. Of course, we're looking at the technicals, and I gave those levels, and that is what we're looking at there. Finally, Don, the catalyst today, a big piece of news was that Constellation Energy, CEG, signed a 20-year power purchase agreement with Microsoft, and this deal is huge. First off, this provides CEG recurring revenue guaranteed for 20 years, and the deal is $16 billion. So pretty much 800 million a year will go to CEG in exchange for the energy or electricity that Microsoft is purchasing for their large data centers. And so with this agreement, CEG is restarting 3 Mile Island, that nuclear power plant that melted down, that closed shop. Some parts of it are still open, but they're going to renovate it and start up the project once again. So it gapped up into new all-time highs, and that is the best sign in these earnings gaps. Oh, and not earnings gaps, sorry. It's news or earnings catalyzed gaps is into either 52-week highs or even better all-time highs. And here, there's really not too much to talk about in terms of technically because we are in blue skies now. But if you draw a line across from that left side peak, the previous all-time high, that is definitely an area that I'm keying on. Anything above it is good, and anything below is bad. So really just keep it simple there, and we'll see how this one trades.
Great numbers on this today, Ted. One thing I want to point out that's interesting, that the way we invest is important because we buy on technicals and fundamentals. We sell only on technicals. You mentioned that huge move down that Tesla did. Look at the earnings per share that they were reporting while that was taking place. You'll have stubborn people that say, my thesis is still intact. Look at the earnings per share on this. Earnings per share is, the market is looking 6 months into the future. And what happened into the future is a slowdown started to happen in these earnings. And then Tesla, when it was reporting earnings nowhere near the way it did when it had this big run, look how weak these earnings are. But what happens now? It's starting to build a base, right? So we've got technicals and fundamentals for our buys. Sell only on technicals. And the same situation is here with NVIDIA now. There are people that believe that NVIDIA can never go down. Same situation with NVIDIA before it had this big pullback. This is pre-split. They had that 10-for-1 split. Their fundamentals were fantastic while this was going on, but it was pulling back. This is while they were transitioning from mining and gaming GPUs into AI GPUs. And then when the big runs started, their EPS was not there, but their forward, they were projecting massive sales. And look at this run that it's gone on now. And right now, massive EPS going on. But again, and I'm not saying that this Tesla story is over, but the prior quarters, 400%, 500%, 400%, 400%, and now only 152%. The fundamentals will always look best at the top. Tesla is forming the right side of a base right now, and Ted gave the key levels. We're involved in the stock. We have a lot of confidence in it. But if this rolls over, we'll get out of it. And for taxable, coming up in November, we've got 100+% gains for some clients that we're hedging. If they get to the long-term capital gains, we can lock it up there. But right now we're long. We're participating in this move, but we will sell if the price action does not support what the story is. No question about it. And we did sell here, and we got back in when it started acting better. It broke the 50-day. We trimmed some when it got back above the 21 and the 50-day over the earlier this week. And last week, we added it back to the portfolio. So we're watching this tight consolidation now. We want to see it get above 120 to add. But we won't let the story get in the way of the price action where, again, buy on technicals and fundamentals, sell only on technicals. Great stuff, guys. That's 6 liters, Dan. A nice review of the market, and you can take it on home.
Well, thank you. And we just got the content of character of price. Price is truth. Always remember that. By the way, I think it's just on an interesting side note, when Ted was talking about 3 Mile Island, the company's going to kind of revamp and reopen because Bill Gates and Microsoft commissioned that for AI to fuel the energy for their AI. AI is going to take so much energy, folks. There's going to be a huge showdown, a huge fight between energy for AI use versus human consumption to stay comfortable, cool, drive our cars, charge everything. So, because AI takes a unbelievable amount of energy. So anyway, it's going to be interesting, but always remember, it doesn't matter how good the story is, the N in CanSlim, is it being confirmed by price? Does that stock have the content of price? Folks, I hope you enjoyed what you learned today, or hope you did learn something today. Please just tell your friends, tell a neighbor, just send them to revereasset.com. Up in the right-hand corner, there's a subscribe button. They can put their name and email address in. We'll send them our daily market insight video every evening. The market is open, and they'll get this podcast Saturday morning. However, if you're a YouTube subscriber, just go to Revere Asset, just revereasset.com, subscribe. Zach will have this. It's about almost noon Central Time on Friday. This will be on by 1 o'clock Central Time on YouTube. For the stock nerds, the stock groupies, they get this before the market close on Friday. Okay? Next to that is a subscribe button. You can send me an email, ask for a stock to talk about or a topic. And you can always email me, just dan@revereasset.com. Folks, you can always call us old school at 855 Real Wealth. We'll talk to you next week on Their Money, not your money, not their money, your money.
It's not about how much you make in the markets. It's about how much you can keep.